Hello and welcome back to Game of Trades, your #1 channel for videos on the stock market and cryptocurrencies. This video is going to be focused on whether or not the stock market is entering a lost decade like it did in the 1970s. Where between around 1966 and all the way to 1982, the stock market was basically flat throughout this entire period. That is a massive period of consolidation. And keep in mind, inflation rates were extremely elevated here. So this is the stock market in nominal terms. It was flat in nominal terms, but when you adjust that for inflation, the stock market was trending down in a very, very big way. And you can see that right here between 1968 and 1982. This was a massive drop on the stock market in real terms. So even though it was flat on the price index, it had major damage in terms of reducing the purchasing power of investors throughout this period. Now, fast forward to 2022, and we've had surging inflation, much higher than what anybody was anticipating. It had a major impact on assets throughout 2022, just as it did in the early 1970s or late 1960s. So should we expect this to be a broader trend, a broader lost decade trend like it was in the 1970s, especially when you see breakouts like this on commodity ETFs between 2008 and 2020? That's 12 years of downtrend for commodities. In 2021, we saw a massive breakout, a long-term breakout, which could perhaps mean that commodities are set to trend higher for the next decade, just like they trended lower in the last decade. Perhaps they're about to show incredible strength throughout the next 10 years. And by the way, rising commodity prices, it has been a primary driving factor behind inflation. And that was also the case in the 1970s. If you take a look at the capital expenditure amongst commodity producers, were at historical lows that we didn't see since 2003. That raises the question of whether or not we're perhaps in an environment with a structural undersupply of commodities. And if you know basic economics, you'll know that if you have a limited amount of supply for the same amount of demand, you're going to see the price rise. And so that's what we had throughout 2021 and 2022 as supply was near extreme lows. So that's the supply side of the equation. But we can also make a strong case that demand is going to be skyrocketing over the next decade. And let me just quickly show you this table of some of the fastest growing nations around the world. China, India here, these two here, they have a population that exceeds 1 billion each. But for now, their GDP per capita is extremely low. In China, GDP per capita is still only around $7,000, and in India, it's only around $2,600. So if you assume that these nations are going to increase their living standards over the next decade, and I think there's a very strong case, and I think it's pretty obvious that's one of their primary objectives, and they're clearly on a path towards that, to reach the GDP per capita of current developed countries like the US, Canada, or the United Kingdom. It's around $40,000 to $60,000. So China could still more than quadruple its GDP just by raising its living standards, and India could see a 20x increase in its GDP just by catching up to the living standards in developed countries. Now, I'm not saying that's going to happen overnight, but these nations are on the path towards that. And in order to raise living standards, you need to consume. You need to consume energy. You need to consume food. You need to build shelter. Raising living standards increases commodity consumption. And so there is a very, very strong case to see rising commodity prices over the next decade, even over the next 20 years, as we see these emerging markets, as we see these nations increase their living standards. So perhaps this spike in inflation that we got throughout 2021 and 2022 isn't just a one-off. Perhaps this is the beginning of a much larger inflationary cycle where commodity prices trend higher over the next decade in a similar way to what happened between 1960 and 1980. And so, as I was saying at the beginning of the video, that wouldn't be a good look. And that wouldn't be such a good thing for the stock market. If we add inflation on top of the stock market throughout the 1960s, 70s, inflation has a terrible impact on stocks. In each period where inflation was rising substantially, the stock market was moving down. Same thing here. Inflation was rising substantially, stock market was moving down. So these are themes that we're watching very, very closely. And if we really are entering a decade of commodity super cycle where oil prices potentially go to $300 in the next decade, copper prices go to $50 in the next decade, we want to be watching out for those opportunities. We want to be on the lookout and also be aware of the devastating impact that can have on the stock market. So that's why we're watching these trends very, very closely. Commodity markets are one of our focus points at gameoftrades.net because we're very aware of these themes. And so if we think there's going to be an opportunity, we want to be positioned for that in a big way, especially when you see how aggressive uptrends in energy can be. Energy rose 250% off the October low in 2020. And this was actually one of our favorite themes throughout 2021 as crude oil was breaking out here, retesting a long-term trend line. XLE, the energy sector, was extremely cheap back here, clearly trying to put in a bottom with a head and shoulder type of pattern here. If we press on that play button, we can see the energy sector massively outperformed the SP 500 throughout this period. But as you can see, inflation is not a straight line. So it is very difficult to navigate. You have periods of rising inflation that are followed by periods where inflation is cooling down. Then inflation picks back up again, inflation cools back down. And so you want to be positioned in the right places at the right moments. In 2021, 2022, you wanted to take advantage, just like in the 1970s, of rising inflation and a falling stock market. But look at what happens when you have peak inflation. Then you see a big narrative change, and all of a sudden, the S&P 500 starts to do well, commodities begin to move down, and that's really not a period where you want to be positioned short on the S&P 500 and long commodities, because you're going to get crushed and probably lose everything you've made until now. Now, this is what a lot of our research throughout 2021, throughout 2022 was based on: the fact that commodities, more specifically oil, was a lot less attractive. Oil prices are a huge contribution to CPI, and compared to any other geopolitical situation, oil had clearly seen a massive run up for the Ukraine-Russian war compared to any other event that are similar in terms of the geopolitical uncertainties. So that really built the case here on June 6, 2022, that perhaps this move in inflation, just like in 1970 and in 1974 and in 1980, is done. And we're heading into disinflation. And although you can be aware that there's a good chance you're going to have a larger commodity super cycle, and you want to be looking out for opportunities along the way, in the short term, 6 to 12 months, you're looking at disinflation. And that's a very different environment to what accelerating inflation looks like. In fact, if we take a look at how XLE has performed since that post on the 6th of June, we've already seen a huge underperformance in the energy sector since the 6th of June. But perhaps that's going to lead to massive buying opportunities to take advantage of a commodity super cycle over the next decade. So that's one of the things that we're actively looking for on gameoftrades.net. We're watching out for these themes and seeing how we should be positioned in the market. If you're interested in having access to our investment ideas, our updates on the charts, our updates on the recent developments, and what we're currently looking at, make sure to go and check out gameoftrades.net. Now, that's about all I wanted to cover in this episode. I hope you guys enjoyed. If you did, make sure to smash that like button and hit that subscribe button if you haven't already. Now, in the meantime, I wish you good luck on your trading and see you next time.